Applicability and General Obligations. Chapter 12 outlines the listing obligations and disclosure requirements for entities with securities listed on recognized stock exchanges under the IFSCA Listing Regulations 2024. The provisions of Part A of this chapter applies to all listed entities, ensuring that disclosures and obligations are met to protect investors and maintain market integrity. The regulations are built on core principles of disclosure and obligation, ensuring that listed entities prepare and disclose information in line with applicable accounting standards, provide timely and accurate information to the stock exchanges and investors, avoid misrepresentation and ensure transparency, ensure that directors act in the best interest of the company and stakeholders, abide by the laws of their home jurisdiction and the applicable securities law of the IFSCA, make periodic filings that help investors track the performance of the entity. Compliance officer and responsibilities. Every listed entity is required to appoint a compliance officer who must be a qualified company secretary. The compliance officer plays a critical role in ensuring the entity's compliance with regulatory obligations. The compliance officer is responsible for ensuring conformity with the applicable regulatory obligations, coordinating with the IFSCA, stock exchanges, and depositories, ensuring that all procedures are followed to maintain the authenticity and correctness of information filed under these regulations. This role is crucial in maintaining the integrity of the listed entity and ensuring accurate information. Material or price-sensitive information. One of the key obligations under Chapter 12 is the timely disclosure of material or price-sensitive information. Any information that could significantly impact the company's stock price must be disclosed immediately, but no later than 24 hours after the event or information is known. The board or directors must determine if an event is material based on whether the omission of the event would result in discontinuity of information already made public, whether the omission is likely to cause significant market reaction, or if the event is deemed material by the board, even if it does not meet the above criteria. Additionally, the company must adopt a materiality policy that outlines how material information will be identified and disclosed, ensuring transparency and investor protection. Disclosures related to corporate actions and meetings. Entities must also make specific disclosures regarding corporate actions and board meetings. This includes announcements related to dividends, buyback of securities, financial results, fundraising, and other material business events. These announcements must be made at least 2 working days in advance, ensuring that the market is informed about any major decisions that could affect the company's performance. In case of annual general meetings or extraordinary general meetings, the entity must immediately disclose the proceedings of the meeting to the recognized stock exchange. Reporting on changes in key personnel. Changes in the board of directors, key managerial personnel, auditors, or compliance officer must be immediately disclosed. If an auditor resigns, the entity must disclose the reasons for resignation within 1 working day of receiving the auditor's explanation. In the case of a resignation by a director or KMP, they must inform the stock exchanges of any irregularities they are aware of that could materially impact the company. Financial reporting and annual reports. Listed entities must submit their audited financial statements for the full financial year within 3 months of the financial year end. For quarterly results, entities have 45 days to submit the financial statements for each of the first 3 quarters. The financial statements must comply with IFRS, US GAAP, India AS, or the accounting standards of the home jurisdiction as applicable. If the company uses an accounting standards other than IFRS, it must reconcile the financials with IFRS. In addition, companies must submit their annual report to the stock exchange as soon as it is finalized. The report must include audited financial statements, directors' reports, a management discussion and analysis, corporate governance practices, and, if applicable, a sustainability report. Corporate governance and sustainability reporting. Corporate governance is a crucial aspect of maintaining transparency and accountability in business in public companies. Entities must disclose their corporate governance practices in their annual reports and comply with the corporate governance norms specified by the IFSCA. In addition, entities with a market capitalization exceeding $50 million are required to submit a sustainability report based on internationally accepted standards such as the Global Reporting Initiative or the International Sustainability Standards Board. This report must be submitted within 6 months of the financial year end and covers the company's environmental, social, and governance factors. Whistleblower mechanism and website maintenance. Every listed entity must establish a whistleblower mechanism to allow directors, employees, and others to report genuine concerns while ensuring adequate safeguards against victimization. This mechanism is vital for maintaining ethical practices within the company and ensuring that any malpractices are addressed. Additionally, each listed entity must maintain a functional website that contains essential information such as business details, board members, financial statements, and investor relation contacts.